Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Jeff, how did you go from being brand new, knowing nothing about rental properties, to having over 100 rental units?
Well, it took a little bit of time. It didn't happen overnight. Certainly wasn't a straight line. It wasn't something that I planned. I had to start by, like anything. If you want to eat a cow, you got to start with one bite at a time. You got to start with something small. So I bought some properties that eventually, some smaller properties that eventually appreciated and allowed me to use the proceeds from sale of those properties to buy more, buy bigger.
And that's really the magic that comes from owning rental properties for the long term, is that as you start to gain equity in your properties, you can take that money and use it to buy bigger properties, better properties, properties that cash flow better. And on the show today, we're going to walk through Jeff's story and see how he got to where he is today. One thing I want to point out before we get into the interview is that Jeff had some money saved when he got started. So he had some pretty big down payments for his properties, but if you don't have the kind of money that Jeff had, you can still follow the concepts that Jeff followed. I think the concepts we're going to be talking about apply whether you have a little bit of money or a lot of money. So just don't let those big numbers psych you out. Let's take a really quick break to thank our sponsors. We'll come right back and we'll talk to Jeff Berlin from Los Angeles. Whenever I check my email, it's easily half spam. If you have the same problem and you want to put a stop to spam once and for all, check out Incogni. They get your information taken off marketing lists so that you get less junk mail. It's so easy. All you do is you tell Incogni who you are, and then they get to work and you get less junk mail. So why procrastinate? Protect your data with Incogni now. Tell those pesky data brokers to buzz off and handle any pushback with the skill of a top negotiator. Got a few VIPs in your circle? You can add up to 4 family members or friends to share in the same premium protection. Head over to Incogni.com, where spam and security risks don't stand a chance. Plus, enjoy a 30-day trial with a full refund if it doesn't meet your high standards. Take your personal data back with Incogni. Use code RENTALINCOME at the link below and get 60% off an annual plan. That's Incogni.com/rental income. It's a lot of work to find a really good rental property. And when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com. NMLS 42056.
Rental Income Podcast.
Let's start off talking about your portfolio. What does your portfolio look like?
Today, my portfolio has changed over time, but currently I own 3 single-family homes. I own a 103-unit apartment and 1 short-term rental.
Now, you live in Los Angeles, which is a really expensive place to invest. Is that where you're investing, or are you buying out of state?
I'm not investing in my backyard. I wish I could. Yeah. It'd be much easier. But no, I can't invest in California for a number of reasons. Not a landlord-friendly state. Everything's very expensive, hard to cash flow. So I invest in the Midwest. Ohio, Kentucky, Indiana.
Now, how did you figure out that's where you wanted to invest? There's so many great areas to invest in. Like, how did you narrow down to those areas?
It was a bit of a journey. It took time. I investigated a lot of different areas, and I actually knew a little bit about the Midwest because I'd lived there before. I'm a dentist, so real estate is something that I do on the side. It's not my primary business. I looked in the Midwest because, number one, I knew the area. And 2, at the time when I was looking about 8 years ago, it was the hot market. I mean, everybody was talking about, where do you go to cash flow? You go to, the coasts if you want appreciation. You go to the Midwest if you want cash flow. Mm-hmm. So I was looking, Ohio at the time was a really hot market. I went to dental school in Columbus, so I knew that area pretty well. Cincinnati was a really hot market. And I, went to some meetups. I met some people, and I knew people that were investing in that area. So yeah, I started networking with some of those people, and that's how I found the area. And I did a lot of research on it too. I mean, I spent time looking at best markets, doing research on population growth, rent growth, and just thought it was a good place to start.
All right, so let's go back to the very beginning. So this is 8 years ago. What was your first property? Like, how did you actually get started?
So the first turnkey property was a property in an area called Middletown, Ohio. I met up with a person that was selling. Actually, she was coming out to Los Angeles and meeting with investors out here that were looking to invest in the Midwest. Start with one and then just buy a bunch. I mean, I thought, hey, maybe I'll buy 20, 30 of these things. If I can get to cash flow, $200-$300 a month with 30 properties, hey, that's pretty good. I want to create cash flow.
So then how did it work out? Like, did everything go as planned?
Yes. I mean, it worked out fine. It did what it's supposed to do. The cash flow is about $100, $200, $300 a month, depending on how much repair and maintenance there is. But it's slow. It's a slow process. It takes time. I mean, to go out buy 30 houses is going to take me, 5 years. And I found out you max out. There's only so many houses you can get through FHA. I think you max out after 10 single family houses. So that wasn't the path that I was going to be able to take.
All right. So you bought that property, and then it sounds like you bought one more turnkey property.
And I bought another turnkey.
And then at that point, you kind of figured, all right, well, buying houses one at a time is just kind of a slow way to go.
Yep.
So then what did you do? Like, how did you change course?
Well, I decided, hey, it's time to go bigger. So how am I going to go bigger? That was when I decided, hey, I actually came across an email from a guru trying to sell a coaching program, offering a free webinar. I went to a 3-day Dave Lindahl course he put together at some small hotel by LAX airport. And I went there to educate myself, just to learn about what people are doing on multifamily. People are running to the back of the room, and I just wanted to get in there, get a few pearls of information, get inspired, which I did. And, I got out of that meeting exactly what I needed to, which was just inspiration. Like, this is the path. This is how you kind of scale. This is how you build wealth quickly. Find something big, find something bigger. So
they actually gave you, because I've been to one or two of those things, and it was just a big sales pitch. But they actually gave you some information.
It is a sales pitch, and I knew going into it was going to be a sales pitch. So I went in with the mindset like, hey, I'm just going in there to learn a couple things, see what people are doing, and not get distracted by the sales pitch.
All right. So then that gave you the motivation, gave you a little bit of knowledge, and then what did you end up buying?
Well, then I started reading more. So then I started, reading books, the ABCs by Ken McElroy, and just learning, wanted to educate myself. And the more I read, the more I realized that was the path. So then I started looking. I was looking in the Midwest and was coming across properties that were too big for me at the time. But I found a 33 unit in Cincinnati, Ohio, that made a lot of sense.
How did you find it?
I found it online. I was searching. I started talking to a few brokers. I found a property that looked interesting on LoopNet. Called the broker, and that wasn't the property I purchased. He had another property that wasn't on LoopNet that he wanted to share with me. So he shared a different property with me, and it was large in number of units. I mean, compared to I wanted to get 30 houses, so this was a 33 unit property. I was like, okay, I can get everything in one sales transaction.
Yeah.
So it was a 33 unit, but it was also small enough that the price per door was not like it would be in California. Buying 33 units in California, I'd need millions of dollars. Buying 33 units in Cincinnati, I needed $1 million with debt.
Okay,
so my equity would be a lot less than that.
So all right, so how much cash did you actually put into the deal?
$200,000.
$200,000. Okay, so it was $1 million purchase. Correct. Now, how did you know that you were getting a good deal? Because the first thing I'm thinking is that if I'm looking on LoopNet in an area that you kind of knew the area, but you weren't local. Like, how do you know that you're not buying a property that that was overpriced or not a good deal? Like, how did you know that you were actually getting a good deal on that property?
Takes a little bit of faith and diving in and figuring it out along the way. But I tried to arm myself with people that could help look over my shoulder. I found a few mentors. I found some people that I had met through networking. I found people that were like boots on the ground that could go kind of walk the property, look at it, and help me go through the due diligence.
So did you go out there yourself to look at it?
I never did.
Okay.
Nope.
Wow.
Bought it sight unseen.
Wow. And I guess, having bought those first two properties, would you say that's what maybe gave you the confidence that this is possible, that you can buy a property without actually walking it?
Yeah, I think that definitely helped me.
Yeah.
It would have been a lot harder just to go out and buy a 33 unit without ever seeing it, without having a little bit of experience.
So how did that property work out?
Great.
Awesome.
It worked out.
And so when you bought it, was it fully rented?
It was 95% occupied. The tenant base wasn't great. We had to make some transitions with some of the tenants. There were some things that we had to work through, but it was cash flowing day one. I didn't have to go in and do a big value play. It was just more of an organic growth of rents slowly over, about a year that I owned the property, year and a half that I owned the property. But it worked out just as planned. I mean, the due diligence was great. I spent a lot of time on due diligence. I spent a lot of money up front on that, just paying people to help me and to kind of over analyze the property before closing.
And then how long did it take you from the time you bought that property till you bought your next one?
Not very long. I actually bought another property probably within 6 months of closing on that deal.
Wow. Okay. And tell me about the next property.
Well, the next property came to me. I didn't have to do any searching. The property management company that I hired to run the property in Cincinnati it was a big group. They manage over probably maybe 2,000 properties, 2,000 units in that area. I became friendly with one of the top guys in the company, and he does a little stuff. A lot of these guys, they do some stuff on the side. So he found a property in an area called Nicholasville, Kentucky, which is just south of Cincinnati. It was a 24 unit, and he wanted me to come in and partner with him because he didn't have enough money to do it on his own. And it wasn't a lot of money, but he was looking for somebody to partner, and he was going to do all the work. So
you would put in the money. Was he putting in money too?
He was. We went in 50-50. We each put in the same amount of equity, and he was going to be the one that was going to be, watching over the property because he lives there.
Wow. Okay. So that's a good deal. I mean, so you're 50-50 partners. He's going to do all the work, and you're just going to put the money in. And then what was the plan with that property? Was it to fix it up and then sell it?
The plan was definitely to fix it up. We didn't know if we were going to sell it right away. We thought maybe we could cash flow it. But it turned out that we ended up selling it. We didn't have any plan going in other than, hey, this is a good property. Let's jump on it. Let's, turn some of the units and see if we can raise the rents and go from there.
How much did you end up making on that?
I doubled my equity on that property.
Wow. In like 18 months. You doubled.
Probably more like 12 months. Yeah.
12 months.
Yeah.
Okay.
12 to 18 months.
Wow. I mean, that's awesome. All right. So you doubled the money, and then it sounds like at this point you sold the other property too, the first 33 unit building.
I did at the same time. Because what happened is I came across a new property, the one that you were talking about, the 100 door in Columbus. Been searching, finding it much harder to find properties. At first I was like, wow, this is easy. These are just kind of falling in my lap. Yeah. Now looking and, getting more into real estate and realizing, hey, this is where I want to invest. I had a hard time finding the next property, but I came across a property in Columbus that surprisingly was another one online. Just some guy was marketing it, small brokerage that didn't really put it out there to a mass audience. Came across a property and was like, this looks nice. I mean, I know the area. This is an area I actually knew. It was in Columbus. I went to dental school there, and I knew this little town called Grove City was a growing area. and the property looked really nice. Google Maps, since I didn't go see it, online and through the brochure, and hey, put in an offer, and I couldn't believe it. Like a day later, they accepted my offer.
Wow. All right. So then the down payment to buy that property came from doubling your equity on that second deal. And then did you make a profit selling the first property?
I sure did. Yeah. That was the only way I could get into this new property.
Okay. So you took all the profit and also the money that you put into those deals, and that's how you got into the 103 unit building.
Correct. Yeah. So I had to do 2 1031 exchanges. I had the property in Kentucky that we were selling because it just was a good time to sell that. So then I had to figure out how I was going to get the money for this new property. And that's how I decided, hey, I got to sell the one in Cincinnati. I love it. It's doing well, but I got to get the proceeds out. Otherwise, I'll never be able to have enough money to close on this new deal.
So was the return just a lot better on the 103? Like it seemed like that first property, your 33 unit, it seemed like that property was doing well. But was it just about having more rental units, or was the return just a lot better?
I didn't know what the return was going to be going into Columbus. I liked the area better.
Okay.
The one I had in Cincinnati was in a little bit of a rougher neighborhood. I mean, it was decent. I would say it was a C plus, maybe mid C. The new property was definitely a B property. And I knew long term I wanted to be in an area where, just a nicer location.
Okay.
Location's everything.
So yeah, you're trading up to a better area. And then did the new property, the 103 unit, did that need any work?
I went in there thinking, hey, this is already cash flowing. I don't need to do anything. I knew the rents were a little bit under market, so there was some room to push the rents over time. But it could have used a facelift. I mean, somebody could go in there and renovate the units and have raised the rents a lot more than I was able to initially. But I didn't have the money to do it. I didn't have any extra proceeds to reinvest back into the property. Did
you go out there and take a look at this one, or did you do this all remotely too?
This is one property that I did go look at.
Okay.
Yes. But not for very long. I flew in like on a Friday, saw it Saturday, and left Saturday night.
And so it's really just the skills that you've been picking up, that you have the right people helping you.
Yes, because this is the same team. So I had this great property management company that I was very confident with. The one that did my one in Cincinnati, the one that was helping me in Kentucky, same team helped me do all the due diligence on this new property in Columbus.
So that seems to be the key to your success, is that you have good, like a good management team. Like you have the right people that are helping you out. It's not like you're trying to do this on your own. Like you've got a really strong team.
Yes. I mean, it definitely helps. You have to trust them. You have to motivate them. But for them as a property management company, they want to grow too. So they're going to help find, investors that are looking to buy more properties, because for them, they're going to be able to, it's a win-win situation.
Yeah.
They're going to grow their portfolio as well.
Is there any advice you would give for someone that wants to invest out of state, but maybe is a little bit nervous to do it? Like, is there any advice that you would give them, or any tips?
Advice is, be cautious, but don't be scared. Make sure that you do your due diligence and you invest time. You don't have to see the property. You don't have to be there. It doesn't need to be in your backyard for you to be successful. It takes a little bit more, it's a little riskier. But I think you can be just as successful as if it's in your backyard. I mean, what am I going to do if I'm going to drive down the street? I mean, am I going to know what to do with the tenant that's having a problem? No, I need a team that's going to be able to do it, whether it's in my backyard or if it's out of state. You do need a team that's a great property management company that can help you.
When you break down what Jeff did, it's really very basic, that he bought 2 properties. They appreciated. He took that money and used it to buy a better property. I really think that's a great way to build a rental portfolio as you start to gain some equity. Well, the next thing that Jeff's working on is a website to match people with mentors. The site's not quite ready yet, but if you want to check it out, maybe if you're listening to this in the future, it could be up. It's called Mentorship Village, and I've got a link to that on the website. You can find it at rentalincomepodcast.com/episode 493. I'd like to thank Shaylee Ridge from Ridge Lending Group for sponsoring today's episode. If you're looking to finance a rental property, reach out to Shaylee. She's got a ton of different loan programs, and she can find something that'll work for you in your situation. If you want to find out more, just go to ridgelendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. Make sure you hit the follow button, and that way you'll get notified every single Tuesday when I put out a new episode. My name is Dan Lane, and this has been the Rental Income Podcast.